Billionaire Ron Barron and longtime Tesla bull went on CNBC a few hours ago. I want to go ahead and react to this video here about the first 5 minutes of it, give my opinions and perspectives, hear what Ron Barron has to say in regards to this one. Then we're going to go ahead and talk a little Apple. Apple had their big event yesterday. All the bulls and bears are out in regards to Apple and giving their perspective and opinion. This one's from a few hours ago. Wedbush analyst explains $240 price target on Apple. That's interesting for a company with a super high valuation that is also has a shrinking business. Okay. And then we'll react to maybe a little bearishness. Apple is a shrinking company. That is actually a factual comment there. So we'll hear what that gentleman has to say. I'll share my opinions and perspectives. I usually do all these reaction videos over on the reaction channel, but you got to understand, Ron Barron, Billionaire Ron Barron, I mean, this man, a great investor, and we're talking about a guy that maybe goes on CNBC 1 to 3 times a year. So yeah, I got to put this one on the Big Dog channel here today, folks. I got to make sure as many people see this one as possible. So appreciate y'all being here. Make sure you check out pinned comment down there. Get my Investing Foundations workshop. It's brand new. You guys will enjoy that one. It's absolutely free.
Now, at a similar stage where it was in 2014, 2015, when I was investing 16, and they were doing 40,000 cars a year. They're now doing 1.8 million, on the way to 20 million. And they've been growing 50%.
So right off the bat, I mean, that's a huge statement in itself. He believes they're going to 20 million cars. My opinion on Tesla's always been they're going to 5 to 10 million cars. I would love it if they go to 20 million cars someday, but that's where his opinion is they're going to 20 mil.
Year, and this year they'll probably be up 25, 30%. Next year about the same, but there's a new car coming.
25-30% revenue.
No, units.
Or units. Okay.
Units, and then they got this, the battery business, which is $6 billion a year, and that's going to be up triple over the next 3 years, and that's going to go up 30 times.
There's been a lot made over the UAW and the potential strike that is facing the big three.
Battery business up 30 times, he says there. That's interesting. Obviously, Tesla has so many capabilities long-term. If they want to sell their battery technology, license it. If they want to just sell batteries, the bottom of vehicles, to other auto manufacturers over time, there's so many places they can take that.
Here. And what's been brought up is they have all of these EVs that they have to deal with. Their cost basis is quite a bit higher than Tesla's.
Way higher. So every time they sell an EV, they sell one fewer gasoline car. And the gasoline car they make money on, and the EVs they lose money on. The traditional OEMs are troubled right now, and I think ultimately, they're going to make metal, they're going to make the units, and ultimately they're going to buy software from Tesla. Tesla is going to be like Intel inside of a Microsoft computer. That's going to be Tesla. Tesla is going to be everything that makes the car, all
right, hold on, Ron Barron. Hold your dang horses for just a moment, okay? Please, Mr. Ron Barron, never, ever say Intel and Tesla in the same sentence ever again. So I understand the point he's trying to make there, but let's just not even go there, okay? Obviously, we know the troubles Intel has had over the past 10, 15 years, and especially in regards to their valuation. So there's no doubt. I mean, if you look at just Tesla self-driving capabilities and where those are headed, where they're at now, there's no doubt that many of the big auto manufacturers are likely going to license that technology over time, and Tesla could make, obviously, immense amounts of money from that technology, right?
And all the inside is going to be Tesla. That's what's ultimately they're going to be licensed.
Are you buying any additional Tesla or SpaceX, or have you kind of maxed out where you feel comfortable with your fund, which is a diversified fund?
In the funds that I manage, I've been maxed out. We had, when the stock went up 20 times after we bought it, we sold for clients about a quarter of the shares. I didn't sell a share personally. I committed to the directors of our mutual funds. I only invest in mutual funds normally. I made an exception in this instance, and I said I was the last in, I would last out, and I won't sell a single share for myself until we sell all of our client stock. And as far as buying more, I would buy more if I could, but I can't. And other guys at our firm are nibbling. They do things like, this is a great price. This is when they introduce this Model 2, they're going to have the cost half of what it is right now, half. And they're going to sell the car for, I don't know, maybe a third less than what it is right now, and there's credits. So this is Toyota almost bankrupted the whole automobile industry 20 years ago.
Okay, so before we go further here, he brings up a great point there, and I think that's a point that's probably missed a lot nowadays, and this is something Ron Barron spoke about years ago. Cathie Wood also spoke about this probably more than anybody years ago, is she basically would explain internal combustion engine vehicles, the cost to make those continues to rise and rise and rise and will continue to rise. And I remember her talking about this all the way back in probably 2018, 2019. Meanwhile, the cost of making an EV is going down and down and down and down. And we kind of reached the, let's call it the tipping point here in the past, we can call it 1 to 2 years, where now it's more affordable for Tesla to make a vehicle. And that's why Tesla's able to be even more competitive with pricing now than internal combustion engine vehicles, which is a really interesting thing. And we haven't even maxed out kind of the cost curve yet in regards to this, right? So Tesla's just getting better and better and smarter at being able to make vehicles for cheaper and cheaper prices. Meanwhile, internal combustion engines, it's just getting more and more and more expensive. And so that's just one of many reasons why ICE vehicles are going to be slowly phased out over this next, we can call it 5 to 10 years, and why EV sales are just going to continue to go up in a pretty epic way over this next 5 to 10 years. Because now you're looking and you're like, dude, if I want to go get a new car, the best deal in the market is a Model 3 and a Model Y. If you want the best bang for your buck by a mile, at this point in time, you go get a Model 3 or you go get a Model Y. There's no way you're going to get a better bang for your buck out there than those two vehicles. It's a no-brainer.
The same time thing.
And that's without even adding on any tax credits or rebates or anything like that. You add that on and then it's game over.
That the big three have their work cut out for them. We're going to have UAW head on today, Sean Fain, and
oh, that's another massive thing. UAW, all these workers for all these internal combustion engine companies are about to make a whole bunch more money. So now the cost of making an internal combustion engine vehicle just went up even a lot more now that this deal is going to likely get done. Whew.
The rank and file are asking for, given the uncertain future of whether Americans ever embrace non-Tesla EVs, I mean, would you think that the big three have their work cut out for them? Would you at least acknowledge that, do you think?
I haven't studied the big three relationships with the unions. I don't own them, although I really like Mary Barra, but I don't know.
Would you like to compete against Tesla?
I would hate to compete against Tesla. So Warren Buffett initially said 20 years ago, 15 years ago, he said that he wouldn't invest in Tesla, and now he says he would hate to compete against Tesla.
Well, what a silly question. You want to compete against Tesla? Okay, yeah, we're going to compete against Elon Musk, and we're going to compete against a car, let's call it an automaker, that keeps dropping price, that has their foot on our throat right now, and doesn't care about short-term profits. Like, you want to compete against them? Absolutely not. That sounds like the worst company to possibly compete with, and they're beating you everything as far as the tech side of everything. They've spent on the infrastructure, they spent on the self-driving software, they've spent on all these things that you just haven't been able to spend. Come on, man. Like, that's not even a question. Of course, like, Tesla's probably one of the last companies in the world you'd want to compete with right now.
So to go on to this, so the Model 2, this is coming within, by 2025. When that comes, that's going to be exactly the same thing as what happened when Tesla introduced the Model S. So you're going to see this tremendous change going on there. And then, as I said,
I don't know if Model 2 is really coming in 2025. I don't know about that. We'll see. I could see it being shown off by in 2025, but I don't know if it's coming. And the reason being is obviously with the price drops of Model 3, Model Y recently, Tesla's going to have a whole lot of sales coming in the next few years for those. You got Cybertruck that's just about to ramp in a significant way in 2024. Tesla's going to have their hands completely tied up in regards to Cybertruck for the next several years. So I don't know. I'm thinking Model 2 might be more of a 2026, 2027 story personally. That's my belief in regards to that. And that would line up better with kind of having all the self-driving software 100% done and being able to get, laws passed in different states, cities, and just countries in general.
Or the software, core competency, Model 2 half price, and then Dojo. So Dojo.
Oh, right.
Yes, I said, what is Dojo? Yeah. So Dojo is a training. And what that is, that they have this massive amount of data for all these cars that have been driving around for millions and millions of miles, and that keeps growing exponentially. No one has that. So they have this data, but to crunch the data, you need compute. And compute is what NVIDIA has. And NVIDIA has a chip which is for everyone to use. They have all these different, device, all these different, opportunities that this company has. What our company has is they're making their own compute. And they, in 18 months, are going to have more compute than anyone in the world, Tesla. And compute itself is in your basement as opposed to the chip that's in your car. So what they're going to have is they will have so much massive capacity to provide services to cars. And
so what Ron Barron's talking about here, I got to give somebody mad credit in regards to this. And his name is Galileo, over at a channel called Hyperchange. I don't think he really posts anymore nowadays, but he used to bring up this point in an amazing way, 5 years ago. He was talking about how Tesla was way ahead of everybody else when it came to collecting miles of, people actually having their vehicles on self-driving, and then that's going to give them this massive competitive advantage 5 years, 10 years out, right? Now everybody, the masses, even Ron Barron's starting to pick up on this now, that this is like huge stuff. Like all these miles Tesla's collected over time and be able to analyze those and what went wrong and why did somebody take their vehicle off self-driving in that situation? What went wrong there, right? And all the data being able to be analyzed and the AI being able to analyze it and be able to make much better decisions for these vehicles in the future. So if a situation happens where this car cuts over here and the Tesla doesn't react fast enough, in the future it's going to be able to tell, oh, this car's moving over this much, it's going to end up merging in my lane, I need to start to decelerate now. And it's going to be able to make decisions at least as quick as a human, but probably much quicker than a human, and probably in a better manner than a human, because obviously as humans, like we're distracted. All of a sudden somebody calls you, you're looking at your phone, you take your eyes off that, you adjust the radio or whatever, right? You look to your left, oh, what's that new story? And all of a sudden in that moment, like a lot can change, right? The car is always watching, it doesn't get distracted. That's the beautiful thing there. So I think, shout out to Gally.
Be able to train this data, to train your car on this data.
Right.
So what's the competitive advantage is the data, and the training is going to be provided by this compute, and they're going to have more of it than anyone. Nobody can catch them. Last year, by the way, you read about the number of people that are seeking jobs, and they're saying that there's too many people seeking the jobs, or whatever they say it is, with too few people. And what Tesla has is this year, I think they have 3.5 million people seeking 30,000 jobs. Last year they had 3 million people seeking 20,000 jobs. So there's 130,000.
Yeah, 100%. One of the, I'll say this, okay, about Elon Musk. He has a lot of definitely strengths, and he certainly has a few weaknesses as well. But when it comes to his strengths, there's two strengths that I think are overwhelming. One has been his ability to raise money over time, right? And that's one of the reasons that when I was investing in the stock many years ago, right, and I was able to get this crazy gains on the stock, right, I was able to tell that like Elon Musk could raise money in any sort of situation. The man raised money for Tesla when it was a nobody company in 08, 09, when nobody could raise money. Like, this is amazing. This is simply amazing, right? That guy can raise money like it's nobody's business. That's a skill in itself. The second massive strength of Elon Musk is his ability to attract top quality talent. And Ron Barron was speaking about there how many applications obviously Tesla always has. And if you are a let's call it a real go-getter, and you want to work for the best of the best, and many times you want to work for Tesla. They don't always pay the best, but your work is likely going to be some of the most let's call it fulfilling work you've ever done in your life. And that's something Steve Jobs used to speak about Apple back in the day when he was leading Apple back in the late 90s into the early 2000s. And he said, and even back in the 80s, he said, we worked our butts off, and people will tell you, like, even though the stress they had to deal with and everything, that was the most rewarding situation that they ever had in their life, right? And they never did anything that was up to that sort of level of rewarding and like game changing and like just feeling good about yourself in the end of like, wow, we really did this, we really accomplished that. So I think those are two massive things there. Alrighty, let's get into Apple. Apple's big day yesterday. iPhone 15 was shown off and all that stuff. So let's hear a little bull and bearish talk around Apple.
On the heels of the new iPhone 15 release, our next guest was at Apple's big event. Joining us now is Dan Ives, Wedbush Securities. He just raised his price target on Apple to 240 from 230, has an outperform rating on the stock. What did you learn in Cupertino, Dan?
Yeah, I mean, like, look, in my opinion...
Did she just mess with him? Cupertino. I swear she just messed with him. Oh, that's funny.
This is still massively underestimated by the street in terms of what this upgrade cycle is going to be. If you look from a chip perspective, battery technology, and what I ultimately is going to be massive promotions that we're going to see from the carriers, and you've already seen from Verizon, it's going to stimulate what I view as a mini super cycle. And I think yet again the street is going to underestimate Cupertino.
250 million of the 1.2 billion iPhone users you think around the world have not upgraded their phones in over 4 years.
Well, I think that really is the key thing here, because I think ASPs ultimately are lifting. We think ultimately at $100 more from an ASP perspective. And it's about the pent-up install base.
Wait, didn't they not raise prices?
So they raised prices on the Max Pro. If you look at Pro, they kept that the same. But the most important thing is the mix. What we're seeing out of our Asia checks, 75% roughly are going to be Pro and Pro Max, where typically is 60%. That's a huge uplift for Apple. And I think when you look at what the street is called, maybe a knee-jerk reaction here and maybe not expecting that this is a wow type of launch, I disagree. I actually think when you see how this all plays out, I think it could actually be iPhone units up year over year. And the important thing is in terms of China, we've done a lot of work this week talking in and out of Beijing, a lot of experts that we talked to. It further confirms my thesis that this is bark a lot worse than a bite, 500,000 units at worst that could be impacted.
You're talking about the government ban, or what we called, at least, or was reported as. You think you're talking to the right people? I mean, you have some...
I think you're talking... So here's what I've heard out of China recently, okay? This is what I've heard. I heard that Huawei is kicking Apple's booty recently in China. That's what I heard. I don't know. We'll see. But that's the whole situation, okay? Huawei, we don't even have to worry about that in the United States, but in China, it's a huge deal.
Chinese, you have Asian supply chain checks, you have government, I guess, Chinese industry contacts, you say, but do you think you're talking to the right people?
Look, I think these are contacts, at least for us, that over the last 7-8 years, with all the black swan events that Apple is going into, they've, I think, navigated us well. Now, look, there could definitely be some scrapes for Apple. I'm not saying that this is rosy and rainbows in terms of having a champagne dinner in Beijing, but what I do believe is that the fears here are way overblown, and I actually think when you look at Huawei essentially is the equivalent of an iPhone 12. I mean, if you actually just compare it from a technology perspective. And I'm not saying that there might be, in terms of shot across the bow and sort of warning shots, but overall, in my opinion, this is, I think, ultimately going to be a lot better than I think the street's anticipating. We believe 45 million iPhones will be sold in China. Only 500,000 at most, we believe, could be impacted here.
When do you see revenue inflect?
When it comes to Apple, it's not like everybody's, saying it's doomsday for Apple and they're done. It's just the bottom line is this company's revenues going down, or the revenues going down again next year? Is net income going to go down next year? And what does that mean for a stock that is at very high PE ratios based upon historical norms? That's the whole debate around Apple. No one's predicting the end of Apple or anything like that, or that the stock's going to crash, 60%. That's not the scenario.
Positive year on year. And if it's not this quarter in the middle of a launch, isn't that kind of weird?
Yeah, I think we start, Carl, at that point, I think in December, going into March, that's where you're going to have services, double-digit growth. The FX headwind now starts to become a tailwind. And then what ultimately, you're going to have units that I believe starts to uptick, call it 4 or 5% with ASP uplift. You combine that all in terms of where it ultimately goes, you're looking at a renaissance of growth for Apple. Now, some will argue the valuation, and I get it, but I view it as the services business that goes to double digits. I think that's worth 1.4 to 1.5 trillion.
Tim Cook is not in the room in the AI meeting with Congress right now. Is there an AI story for Apple? Because that's what tech investors really want right now, isn't it?
And we believe it's 2025 when they come out with the AI App Store. I think that's going to be a huge piece.
What's going to be the AI App Store?
So we believe, and this is our view in terms of talking to developers, Vision Pro, that's the start of a new form factor, essentially a new app store that they're starting to build with developers, but that's ultimately going to go into what's going to be AI apps specifically in the App Store for Apple. And that's going to be another area of monetization, from health to fitness to life sciences. Apple, when you put it together, we believe they've spent almost as much as Microsoft has on AI. So they're not going to be on the outside looking in here. And I think they continue to play the long game. And it's one where it's hard to argue with what Apple's done from a success story.
That's a headline. They've spent as much as Microsoft on AI.
Yeah, so in regards to Apple in, launching an app store and those sorts of things, there's definitely a possibility. He mentions about 2025. Problem is we're still in 2023, right? And so if they do launch in 2025, when do they launch in 2025? How much of a success is it right away? Apple's such an insanely huge business now that to affect numbers positively in any way, you're going to be needing to do at least many billions of dollars of revenue for it to even start to kind of be recognized as anything that's a game changer for Apple, right? So when does that ramp happen? Is that 2026 then or 2027? Now we're talking about many years away for a stock that a lot of people are looking at right now and feels very overvalued, right? Given the fact that revenues are literally going down for the company. So these are just all things to kind of consider, and let's hear the bearish argument now.
And is overvalued at 30 times earnings. Joining me now is Bill Miller, the fourth chairman and chief investment officer of Miller Value Partners. It's great to see you, Bill. Welcome.
Thanks for having me, Kelly. Excited to be here.
I've been thinking about you the last few months as Apple's share price has
Pause.
Performed so well, and you might say there's more to it than just a pullback.
That's right. Well, I think somebody needs to tell the market that Apple is a shrinking company trading at a growth company multiple. If you think about the scale of Apple...
That's truth. That's just facts. That's facts. That's not even like an opinion. Apple is technically a shrinking company. Look at its revenues last quarter. And it's trading at growth multiples. That's also a fact. So, interesting.
As large as it is. In fact, if you think about the market as a whole and its constituencies, we're at a really interesting point in that 2% of the names in the market collectively comprise 33% of the market cap.
Wow.
That's because these mega cap companies are trading at very, very high multiples. That, by the way, 33% of the market for the top 2% of names, that's an all-time high, going back to the 70s. It's roughly on par with those levels. But if you just think about what it takes for Apple to grow from a $395 billion revenue base, you think about, okay, the economy grew at 6% in Q2, nominal. Let's take 6% of $395 billion. That's $24 billion in revenues. That's McDonald's revenues. That's Charles Schwab revenues. It took decades to create these companies. So to actually grow from this base is a very hard thing to do, yet it trades at 30 times earnings, which implies a high expectation for continued growth.
Where do you think fair value is? So the stock's around 170.
So to push back against that point, I don't really buy that point because you could have made that argument for a long time in regards to Apple and they found a way to do it, right? So, yeah, I don't give that point as much of credit as I do just the simple fact that Apple's trading as a growth stock and as a shrinking company right now.
It doesn't sound like you've been shorting it per se, because this would be a tough thing to do to do an almost $3 trillion company. But they are doing a lot of things. On the financial engineering front, the share count's fallen by like 30% or more over the past decade. They've done a ton of share buybacks. I mean, they seem to be very eyes wide open to the realities that you're describing.
That's fair. There's obviously optionality. I mean, they could fire people, they could cut expenses, but most companies don't cut their way to greatness either. So there is optionality there. It obviously generates a ton of cash flow. It's in every single a ton of people's hands around the world all the time. But again, that scale is a very hard thing to overcome.
We spoke with Paul Meeks yesterday, who was also quite bearish about the company. And by the way, there's Mark Zuckerberg exiting the meeting of AI leaders on Capitol Hill today. We're out there waiting to see if anyone wants to make additional comments to the press, which so far he and Bill Gates have declined to do. But Bill, as we talk about Apple, our guest yesterday said they missed their opportunity to buy a Tesla.
Why's Bill Gates there? Bill Gates hasn't been a CEO in like 100 years, man. Seriously. I don't think Bill Gates has been CEO for decades. Literally decades now. Why would he even be there? What?
I think he might have used the Disney example. Maybe they still have that chance now. Should they do something transformative that would make you more bullish?
Well, I think the track record of companies doing massive M&A deals is generally not great. So that's probably not something I'd be looking to do if I ran the company. But
and so to go back to the point of like firing a bunch of employees, cutting costs in terms of that, what Apple needs actually to be able to pull that off, they need their stock to go down a lot. They haven't, with their stock high flying, I mean, it just hit a record high, literally, what was that, a month ago, 2 months ago? You can't do some sort of big employee cut if your stock's at an all-time high. That would look like the most disingenuous, like horrible move to make, right? Meta got away with the huge layoffs they had. Amazon got away with those when their stocks were down 50+%, okay? So if Apple needs to or wants to do a big cut at that company, They need the stock to go down. If the stock goes down to $130, $120, $110, then we can talk about job cuts. And Tim Cook will have all the leeway to pull it off, but you can't do that when your stock's an all-time high. It looks like just ridiculous.
You know, I'm not sure exactly how they create value from here, but as an investor, what I think about is, what do I want to be buying? I want to be buying smaller to mid-cap companies whose valuations are nowhere near what these massive companies are. There's actually a real limit to what these companies can do. So if you think about Apple growing, it's such a massively scalable, or it has been so scalable in the past. I mean, if you think about what it would require for them to grow, it's very, very challenging. And I guess, again, you can cut stuff out, but they're stuck here. So from an investor's perspective, we want to be buying things with big free cash flow yields, good management teams. They're allocating money in intelligent ways, buying back their shares, and are certainly in tune with the situation.
Yeah, well put. I mean, at the end of the day, simplest way to put it with Apple is if you buy the stock, you kind of got to be willing to potentially have dead money there for a couple of years. That's kind of my thought in regards to Apple here, at least over the next year or two. I appreciate everybody joining me as always. Thanks so much for being here. Thank you for being subscribed, folks. Much love as always. Make sure you get my free workshop. That will be pinned comment down there. You'll get a ton of value from that. And have a great day.